Folks, Starbucks reported earnings, and the question we're going to answer today is Starbucks a buy, sell, or a hold? So stick around. We're going to talk about the earnings report. We're going to talk about the after-hours price action, and we'll talk about the valuation of the company, and we'll segue over into some analysis of the chart and a setup that I see forming here, and we'll try to divine which way the stock is going to go in the coming days. Now, immediately after this commentary, we're going to be doing members market wrap. So members, I'll be putting that together. That's where we talk about our strategy moving forward, along with the positions that we hold and my thoughts on the markets today and where I believe that they are going. So if you're not currently a member, 14-day free trial offer, link below. You get TrendSpider for free, silver and gold level members only. So let's get to it. Okay, so Starbucks reported their KPI of same-store sales of 7%. No bueno, folks. For same-store sales, you do not want to see a decline of 7%. Ideally, this is a key performance indicator for retailers. You want to see expanding same-store sales. We do not have that here. A decline of 7%. Add to that, you had a suspension of Starbucks providing forward-looking guidance. So what that implies to me as a trader is that they don't know what the new year brings. So if you're an institutional investor and you're trying to decide whether or not you're going to continue accumulating the shares of Starbucks or whether or not you're going to begin bull operations, you're probably going to think twice because you have no guidance from the company as to where they think their business is going to be this time next year. Also, they announced that promotions here, Starbucks on Tuesday said that more frequent promotions to app users and expanded product offerings failed to boost customer traffic in the United States, dragging down the chain's quarterly performance. So what this tells us is that it just reinforces something we already knew, and that is that the consumer is broke. You could see delinquencies rising at the major banks. So the consumer's broke. They're tapped out. And Starbucks is beginning to feel the pinch. So let's talk about the after-hours price action of the shares. And initially, the shares dropped down to $88 per share. That's a pretty significant move. But cooler heads prevailed, the shares bounced back, and we've dropped down into a trading range. I'm not going to do anything right here, right now. I want to see what happens at 2 a.m. And yes, I will peak at 2 a.m. Eastern Standard Time when the institutional money has more clarity about what they want to do with Starbucks. Will they gap it up? Will they gap it down? Between now and tomorrow morning, I'm probably not going to do anything but watch and then decide which direction we're going to take on Starbucks, and I already have an inkling of which direction I'm going to go, and it's probably to the short side. But there's a reason why I'm being very, very careful about executing on that trade, even with the data that we have right now, because we don't know whether or not this has been priced in, do we? So right now, we need to look at the price action for what it is. The shares are down. They're well off the lows of the session. Therefore, somebody was willing to step in and buy at $88 a share. So I take notice of that. And at this point in time, we do nothing. That's the discipline. Now, for some historical reference about how expensive we were going into this earnings report, we're going to go over a full ratio report on Starbucks. The EPS grown by 8% year over year. This does not include today's earnings report. The price to earnings PE is 44% lower than the 5-year quarterly average of 48.2%, but 10% higher than the last 4 quarters of 24.4. Net income is up 8% year on year, but has declined by 2.1% since the previous quarter. Now, add to this report the fact that we had another miss today. Starbucks debt has increased 3.8% year over year. For a visual, which I always like, here is the valuation, the PE multiple on Starbucks, and we're not overvalued, we're not undervalued by any stretch of the imagination. Price to sales has been hooking up. In fact, it looks as though it had broken out, but I believe that this is probably going to roll over. Return on invested capital in red has been declining. That's not good. That's one of my favorite metrics. Return on sales flatlined, and return on assets continues to decline. And we've already mentioned this, that debt continues to rise over at Starbucks. So what's the trade here? The trade is that we had already picked Starbucks up on a scan, a TrendSpider scan, a few days ago. Now, I was not going to execute on the trade until earnings were reported because I consider earnings to be a binary event, meaning you have no idea what's going to happen at earnings. I don't care who you are on CNBC. People that tell you to buy into earnings, they're really being either A, naive, or B, very cavalier with your money. So I would not encourage anyone open a position immediately into an earnings report because you have no idea what's priced into that report. So please be careful. Now, let's talk about the setup here on Starbucks. We ran a scan using TrendSpider, 35% discount code below, and I give it away free to our silver and gold level members. And the scan I ran was for a Bollinger Band squeeze. And in this case here, we have the Bollinger Bands in black. We have the Keltner channels in green. This is reflective of the after hours price action, this break of support. So what this chart tells us is that, or at least prior to the earnings report, that you're going to get a volatile move in one direction or the other. The question was, which direction? All this setup tells you is that there's a tremendous amount of energy built up here, a tug of war, if you will, between bulls and bears. The question is, who is going to win? Well, we need a catalyst, and I think we just got that catalyst, and that catalyst was a bearish catalyst. So I think this is probably going to break to the downside. So it looks as though what we're going to do is we're going to begin to build a bearish short position on Starbucks as soon as tomorrow. First, I want to take a look at the weekly chart to get a vibe for where we're at on that time frame. I mean, the weekly chart looks pretty good here. In fact, we broke out last week. This week, this is not reflective of this price action of the after hours price action. This will be updated in the morning. So I think that we need to short Starbucks if it fails to hold this breakout point from last week. So members, I'll be sending out an alert when we do pull the trigger on a Starbucks trade. Now, another trade that we're watching out for is the XLY. This is the Consumer Discretionary ETF. Now, right now, the implied volatility of the ETF is very, very high. I did a little bit of investigating. I found out why. The why is that you have Tesla that is a big component, and I'll show you. Tesla is the second largest component of the XLY, with Amazon being the first. Tesla makes up 12.45% of this ETF. Why does this matter? Well, Tesla reports earnings tomorrow. I don't want to short this vehicle until I know that Tesla has reported, and ideally, if I want to get short of the XLY, I would hope that Tesla misses. Now, Amazon is soon to report as well. That makes up nearly 23% of this basket of stocks. Now, Starbucks is in here. If you were wondering, that's down here at around 3% of the weighting of the XLY. So the reason why I don't like it, I don't like the retail sector in general. I think the consumer, as I mentioned earlier, is broke. Now, to be honest with you, looking at a weekly chart here, we broke out back here the week of September the 16th. And what did we do? We rallied, pulled back, stair-stepped around here, did a retest. What did we do last week? We moved up higher. This week we have an inside week. Ideally, we're looking for a failure to hold this support level. If we get that failure and we get it on volume, we'll be looking to open up what you call a bear put spread. What does that mean? That means I want to buy a 70 delta put way out in time, beyond 60 days, And simultaneously, I want to buy a out of the money 30 delta put, and that way that sale of the 30 delta put helps finance the purchase of the long put. So that's the trade I'd be looking at. If you get weakness out of Tesla, and if Amazon misses, this thing is just going to go through the floor. So those are the trades. Members, let's head on over. Let's go over market wrap. Let's talk about the markets today and where I think they're going to go. If you're not currently a member, link below on YouTube, link above on Twitter for our 14-day free trial offer, and get TrendSpider for free when you sign up for our silver and gold level members. Members, I'll see you on the other side. Be well.